Good morning and welcome to TOI Japan Market Radio for Thursday, December 11, 2025. I'm your host coming to you from Tokyo with our daily briefing designed specifically for global investors tracking Japan exposure. We'll walk through today's market action, key headlines, and what they mean for your Japan positions. Joining me as always is our portfolio manager who focuses on Japanese equities and macro. Let's start with the numbers. How did Tokyo trade today?
Thanks for having me. We saw broad-based weakness across Japanese equity indices today. The Nikkei 225 closed at 50,148.82, down 0.897%, while the TOPIX fell 0.76% to close at 3,525. Smaller caps had a rougher session with the Mothers Index dropping 1.82% to 2050. And J-REITs also declined 0.45% to 1992.0. On the currency side, the yen appreciated against the dollar with USD, JPY falling 0.835% to 155.529. Commodities were mixed in yen terms, with gold down 0.159% at 15,685 and crude oil declining 1.232% to 57.74.
So risk off across the board in Tokyo. What's driving this weakness?
The headline story today is really about two interconnected themes. First, we're seeing concentrated selling pressure in technology stocks, particularly SoftBank Group, which is a massive weight in the Nikkei 225. Second, and perhaps more importantly for global investors, there's growing anxiety around potential Bank of Japan rate hikes. These two factors are feeding on each other and creating downside momentum.
Let's unpack that SoftBank story and the BOJ rate concerns. The main headline crossing wires today was that the Nikkei's decline was primarily driven by SoftBank's slump amid broader fears of BOJ tightening. What actually happened here?
SoftBank experienced a significant sell-off today, and given its enormous market capitalization and index weight, that single stock move created meaningful drag on the entire Nikkei 225. This highlights a structural issue in Japanese equity markets that global investors need to keep in mind, which is sector concentration risk. When you have mega-cap tech holdings like SoftBank dominating index performance, any company-specific weakness amplifies volatility across the broader market. It reveals limited diversification in index leadership.
And the Bank of Japan angle? How does monetary policy tie into this technology sell-off?
The connection is fundamental to equity valuation. Japanese equities, particularly growth-oriented technology stocks, have benefited enormously from the BOJ's extended period of ultra-accommodative monetary policy. When market participants start pricing in potential rate hikes, discount rates for future cash flows increase, making high multiple growth stocks like SoftBank less attractive on a valuation basis. Technology and growth sectors are especially vulnerable to this repricing dynamic because their valuations rely heavily on low discount rates.
So what does this mean concretely for positioning in Japanese equities going forward?
If BOJ tightening expectations persist, we should expect continued downside pressure on the Nikkei and TOPIX, particularly in technology and growth sectors. The more interesting trade setup would be a rotation into defensive and value stocks, which tend to outperform when central banks shift toward tightening. Global investors who are overweight Japan growth should be thinking about hedging that exposure or rebalancing toward quality defensives. This is a classic late-cycle rotation play.
What about the implications for currency and rates markets?
On the yen side, if BOJ rate hike expectations continue to build, we should see the yen strengthen. Higher Japanese yields improve the economics of unwinding yen carry trades, which have been a major theme in global macro for years. As for Japanese government bond yields, particularly the 10-year JGB, we're likely to see upward pressure if market-implied BOJ tightening odds continue to rise. The key monitoring point for global investors is BOJ communications and incoming economic data. Any hawkish signals from Governor Ueda or the policy board could trigger broader equity repricing and yen appreciation.
Staying with policy themes, let's shift our focus regionally for a moment. There was significant news out of China today that has direct implications for Japanese markets. China's leadership signaled their commitment to maintaining flexible monetary policy into 2026, with explicit willingness to implement further reserve requirement ratio cuts. Why does Chinese stimulus matter so much for Japan?
China is Japan's largest trading partner, so this is absolutely critical for Japanese exporters and the broader equity market. When China implements monetary easing and fiscal stimulus, it directly boosts demand for Japanese capital goods, automotive components, industrial machinery, and semiconductor equipment. Beyond the direct trade channel, Chinese monetary easing typically weakens the yuan, which affects competitive dynamics in export markets where Japanese firms compete with Chinese producers. The bottom line is that Nikkei 225 and TOPIX performance is fundamentally tied to the health of the Chinese economy.
How should global investors position around this Chinese stimulus announcement?
In the near term, this is likely positive for Japanese equities. Sustained Chinese stimulus should stabilize earnings expectations for large Japanese exporters and support demand visibility. The sectors that benefit most would be cyclicals like machinery, autos, and semiconductors. These are the companies with direct revenue exposure to Chinese capex and consumption. On the currency side, Chinese RRR cuts typically depress the yuan, which can widen yield differentials and support risk on sentiment that tends to weaken the yen or push USD, JPY higher. For JGB yields, we'd expect modest upward pressure in a stimulus-driven risk-on environment, though BOJ policy remains the dominant factor.
So we have cross-currents here. BOJ tightening fears pushing the yen stronger and equities lower, but Chinese stimulus providing support for Japanese exporters. How do you reconcile those opposing forces?
It's a tug of war, and the outcome depends on which theme dominates in the weeks ahead. If BOJ hawkishness accelerates, that will likely override the China stimulus positive and keep pressure on Japanese equities, especially growth and tech. If China's easing measures prove more aggressive than expected and BOJ signals remain cautious, we could see Japanese cyclicals and exporters outperform. Global investors need to be dynamic here and watch both central banks closely.
Meanwhile, in corporate news, there's a significant financing story that underscores Japan's strategic priorities. Reports indicate that Japan's megabanks are prepared to lend up to 2 trillion yen to Rapidus, the state-backed semiconductor manufacturing company. That's roughly 13 to 14 billion US dollars. What's the significance of this financing arrangement?
This is a textbook example of coordinated public-private sector support for strategic industrial policy. Semiconductor manufacturing is a critical pillar of Japan's economic security, especially as geopolitical tensions around chip supply chains intensify globally. The fact that Japan's megabanks are willing to extend this scale of financing signals institutional confidence in Rapidus's business model and alignment with government priorities. It reduces execution risk by ensuring Rapidus has the capital needed for its capex-intensive fabrication plants without relying entirely on equity dilution.
How does this Rapidus financing impact Japanese markets more broadly?
For equities, this is modestly positive for electronics and semiconductor-related names. It reinforces the structural reform narrative around Japan and supports sentiment in the financial sector, given megabank exposure to high-profile industrial champions. On the FX side, the impact is marginal because this represents domestic capital deployment rather than foreign direct investment, so there's limited immediate support for the yen. JGB yields should see negligible direct effect since this is credit reallocation rather than fiscal issuance. But it does underscore the government's commitment to growth-oriented industrial policy, which is a positive long-term theme.
So this is more about the Japan Inc. narrative and semiconductor self-sufficiency ambitions than near-term market-moving news.
Exactly. It's a signal of strategic intent and institutional backing for Japan's chip ambitions. For global investors, it's another data point supporting the thesis that Japan is serious about rebuilding domestic manufacturing capacity in critical technologies. That's a multi-year story, not a one-day trade.
Let's bring this together for our global investor audience. What are the main themes to take away from today's session?
3 key themes. First, Bank of Japan tightening fears are creating volatility in Japanese equities, particularly in technology and growth stocks with high valuations. Second, Chinese monetary easing provides a tailwind for Japanese exporters and cyclicals, creating a cross-current with domestic BOJ concerns. Third, strategic financing for Rapidus reinforces Japan's long-term commitment to semiconductor self-sufficiency and industrial policy. Global investors need to balance these short-term volatility drivers with longer-term structural themes.
And in terms of positioning, what should investors be watching most closely?
Watch BOJ communications very carefully. Any hawkish shift from Governor Ueda or the policy board will be the dominant near-term driver for Japanese equities, the yen, and JGB yields. On the China side, monitor the scale and effectiveness of stimulus implementation, as that will determine whether Japanese exporters can offset domestic headwinds. Finally, keep an eye on sector rotation within Japanese equities. If rate hike fears persist, defensives and value should outperform growth and tech.
That's a comprehensive overview of today's market action and the key themes global investors need to track in Japan. If you're managing Japan exposure or considering allocations to Japanese equities, make sure you're subscribed to TOI Japan Market Radio for daily updates. Thanks for joining us today.